Good morning. You're watching Market Cafe with me, Shriyansi Singh and Vinny Motiwala. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe. Good morning, Winnie. Truncated week for the US markets, but how does the rest of the international handover look like?
Absolutely. So truncated week for the US markets, but how the European markets are actually looking like when you look at that, seems like a bit of a mixed close that came in for the European markets. Slightly subdued when you look at it in terms of DAX, that managed to close actually just 0.1% lower, while in terms of the FTSE as well as the CSE, that managed to close a bit on the positive side. CSE actually was quite flattish, but FTSE at least managed to close with gains of around 0.2% in trade. That's how the European market closed. But let's also keep an eye out on what oil prices did, right? Overnight, when you look at it, and this morning actually, what Brent crude oil is doing is that it is at $83 around per barrel mark as well, and it's down almost 0.1% in trade. Obviously, when you're looking at it in terms of WTI crude oil, that's seeing a bit of a positive up move, 0.3% uptick on that front as well. Now, oil came down a little bit yesterday in trade because overall there were concerns about demand slowdown, fears that are there of potential supply disruptions that are there because of the Red Sea issues that have been continuing, and that is keeping the oil prices a bit volatile in terms of trade as well. So that's that's something that everyone is watching out for in terms of the prices for oil as well going forward as well. That's going to be a key factor to watch out for as well. Other than that, gold prices actually trading a bit on the positive bias this morning. We have $2,028 per ounce mark is what the gold prices is trading at. It's at a 1-week high. Soft dollar is obviously there. Middle East turmoil, so safe haven commodities. So gold prices seeing a bit of an uptick on that front and continues to be on the positive side. But that's how the commodities market is looking like. That's how we saw the European markets close. As of now, Nifty implied is only quite flattish in trade when you're looking at it as well. Nothing exciting on that front. Flat open is what is indicated even for the Nifty.
Absolutely, but there's also a lot of events to look out for, right? So when you look at corporate action front, you've got Choice International that will be trading X bonus in ratio of 1:1. You've got the income distribution of Brookfield India REIT, and that will also be on investors' calendar. But there's the last day to buy to be eligible for dividend for a host of counters. So the likes of HAL, SAIL, Precision Wires, PFC, TCI Express, even a Coal India, Aurobindo Pharma, Apollo Hospitals, or Amritanjan Healthcare as well. Now, in the IPO corner, of course, you've got Vibhor Steel Tubes IPO that will be listing today. So keep an eye on that one as well. In terms of other events, you do have PM Modi visiting Jammu and Kashmir, as well as the Maharashtra government tabling the bill for 10 to 12% Maratha quota. And that will also remain in focus. So these are largely the events that you should keep on your radar.
Obviously, interesting events that we are keeping an eye out on today as well. But let's look at the top stories that are there in the global world and what is happening over there in terms of top headlines. After starting the year with a neutral rating across assets, Goldman Sachs has shifted its stance on global equities to overweight. Bank said that the core asset performance has had a more procyclic feel in the recent weeks, and this is due to stronger than expected US data as well as signs of impending global manufacturing recovery. Now, what Goldman Sachs also highlighted and added that the monetary policy easing cycles has actually historically been quite supportive for risky assets. However, in terms of potential for global earnings growth, that remains quite relatively muted due to the falling revenue growth as well as a minimal room for margin improvement. Now, although the note also says that the global economic growth creates upside risk to earnings growth as well, but that's the word that's coming from Goldman Sachs.
Yeah, and after that bullish stance on global equities, Goldman Sachs has raised its year-end target for benchmark S&P 500 to 5,200, which is a 4% upside from its current level. Now, the call reflects an optimistic earnings outlook for the index companies. The bank also believes that strong world GDP and mild weakness in the dollar should support EPS, while lower rates and oil prices will be mild drags.
Let's get into some update on Germany and what's happening there as well. A week after UK and Japan are entering into a recession, central bank has warned Germany to be the next candidate as well. The bank cites consumer caution amid sluggish external environment and demand environment. Not just that, the central bank also points towards the lofty borrowing cost weighing on the country's domestic investments as well.
And Chinese tech giant Alibaba Group is betting big on overseas e-commerce businesses amid sluggish domestic growth. This after Q3 earnings, silver lining came through their international e-commerce unit, notching a top-line growth of 44% on a year-on-year basis.
Okay, that was all the global updates that we had this morning, all the top headlines on the global front. But don't go anywhere because we're going to slip into a very short break and come back with all the updates that are there in the Asian markets, what's happening in the world of domestic market as well.
Welcome back. Thank you so much for staying tuned in. Well, let's get stock specific then. And Coal India shares took a drubbing in trade after the PSU warned it is likely to miss its financial year 24 production target. Moreover, the coal miner also said that the company's e-auction premium has fallen from 117% in December to just 45% in the current quarter. Let's listen in to what else the management had to say.
One company, SCCL, there is due to some land shortage initially. Now there is no issue, but around 8 to 9 million ton, we are a little bit lagging behind. That comes to around 171 million ton around right now. But we are few mines, the EC clearance is also being ended. So we are trying for 10% growth is already there to keep the momentum. 5 companies for sure it is achieving targets. In SCCL, there is an issue in initially mega projects, 2 projects, and hence, though there is a growth in that company, more than 10, 12%, 13% growth, but the target set is to achieve 197 million ton. Last year, they could achieve 162, previous year, 147. So 147, 162, that is a huge jump last year, FY23. Again, 25 million, again, huge jump, but there may be some little around 10 million, 8 to 9 million gap may be there. Recently, due to the present scenario of our coal stocks at power plant and subject to demand, it is kept as 838 million ton instead of 850 next year. So we are on course to achieve this, and the preparations are going both for monsoon preparation also. In 24 monsoon, also we are working on it. Our tenders are in place, and all the arrangements to face the monsoon by May 31st will be in place, so that monsoon also there will be smooth production and dispatches, and we will try to achieve 838 million next year.
Okay, that was the word coming in from the Coal India's management on the con call yesterday. Like you can see on the charts right now as well, Coal India closed at the lowest point of the day. But today we do have brokerages that have come in quite positive in terms of the views that have come in from the brokerages as well. CLSA is maintaining the outperform. They've raised the target price to 480 rupees per share from previous target price of 330 rupees per share. They said that the higher volumes may offset the lower e-auction premium that we are seeing. That was a concern that came in during market hours yesterday. The sales mix is likely to improve. Valuations are quite fair. Dividend yield is elevated at 6 to 7%. So there's no, much of a negative that they say. Yes, they believe that higher volumes is something that will offset the e-auction premium concern that came in. JM Financials too maintaining a buy. Target price remained unchanged at 500 rupees per share. Focus, they said, is going to be on diversification. That continues. Overall growth in e-auction volumes led by power demand. That's what they're expecting. Other than that, thermal capex revival is there. Long-term targets that are there that will augur well for the company. Lastly, Nuvama too is maintaining a positive stance, maintaining a buy rating, that is at target price of 561 rupees per share. For Coal India, they expect a 6% volume CAGR growth over FY23 to FY26. They said that the lower guidance is still higher than their estimate. So yes, nothing negative on that front in terms of that for even Nuvama as well. So brokerage is surely not too concerned about that volume guidance that came in terms of the e-auction premium that came in there as well, which saw a bit of a fall yesterday from 115%. It came down to 45% approximately. That is a concern that came in. But today, brokerage is sounding quite optimistic even after the con call.
All right, moving away from that then, let's take a look at some important commentary that's coming in at the HDFC Bank group events that Sridhar Jagdishan, HDFC Bank MD and CEO, emphasized the company's steadfast commitment to bottom line growth represented by EPS. Now, he also shared how the company is willing to go slow but steady to navigate the post-merger era for the bank. He also commented on the Paytm saga and how following regulations is a must. Listen in to what else he had to say.
So this is the period of transition we will have to adjust to. And so our anchor is that as a company for 29 years, we have always been consistent on the bottom line growth, which you can call it the earnings per share or whatever that is. And going forward too, we will have that as an anchor. So a lot of other metrics you may want to sort of ignore because of the transition, especially on the loan growth. And that could be a tad lower, but that's all right. I mean, that is something that is not going to be at the cost of my earnings trajectory. We're not in the quantity game at all. We don't want to grow just for the sake of market share. Very clear, this is not a new philosophy. This is a philosophy that we have been building our franchise over the last 30 years. And we're proud of that, but we're not going to be compromising both on margins and risk. So there is a certain trajectory that we will operate, a band that we'll operate, whether it's a margin band, whether it's a ROA band, and that is something that we are very particular. If there is some kind of a disruption there, happy to go slow. They do have a great tech platform, and that is what we have a partnership which sort of harnesses that. And it's not a big thing. As I said, these are experiments that we are happy to sort of continue as long as we maintain control of the regulatory norms, etc.
Let's stay with this then, and my colleague Ankur Mishra is standing by with more details on what the management had to say as well.
Yes, important commentary coming from HDFC Bank MD and CEO regarding margins as well as growth. On the margins front, it has been mentioned that the bank is not going to compromise on margins as well as risk. In fact, he has mentioned that they plan to operate into certain band, and that will continue as far as margins and ROA is concerned. If there is some kind of disruption, the bank is happy to go slow, and that has been indicated clearly by the management. Also, MD and CEO has mentioned that as it has been the case in past 29 years, there is some time where the transition is happening, and this he is referring towards the merger of HDFC Bank and HDFC, and as the bank has been consistent in the bottom line, and similarly even in the quarters to come, in the road ahead, the bank wants to be consistent as far as earnings per share is concerned or the bottom line is concerned, and that is not going to get compromised as it has been the case with the institution in the past 29 years. Apart from that, important comments also coming in on the Paytm front as well, whereby he has mentioned that Paytm has been an important entity as well as partner regarding the future partnerships. He is saying that as far as regulatory approval goes, he would want to explore that, but any opportunity will not be for the sake of it. He mentioned the case of FASTag, he mentioned the case of merchants acquisition. There is an opportunity for the bank, but not for the sake of it.
Okay, thank you so much for that, Ankur. But let's look at what brokerages are saying on HDFC Bank as well. You know, let's not forget HDFC Bank has been an underperformer in terms of return as well in the last 6 months, 1 year. Nothing exciting in terms of a performance. Now, Citi maintaining a buy. They said the SOTP valuations are quite fair, and the pricing that they've given target price is at 2,050 rupees per share for HDFC Bank. Currently, HDFC Bank is trading at 1,417 rupees per share. Citi is further highlighting that clearly articulated preference for earnings growth is coming. Management is not chasing high cost deposit flows, as well as constraints in deposit may actually moderate loan growth is what they are highlighting, as well as HDB Financial is on track for listing timelines as well. So that's interesting. That is coming in from Citi on HDFC Bank. Bernstein maintaining an outperform rating, target price of 2,100 rupees per share. They're saying that the long-term thesis remain quite solid in terms of the bank and confident. They're confident that the company actually will achieve superior risk-adjusted yields, as well as loan growth can be a tad bit lower, but replacement of high-cost liabilities will boost the margins. They expect sharp improvement in deposits, and accretion branch expansion is what one could watch out for as well in terms of the bank's performance going forward, as well as a core part of the strategy as well. So yes, not in terms of brokerages, not that sad about HDFC Bank. They're giving quite a positive view as of now for HDFC Bank.
Absolutely. And for now, let's just stay with banks, but look at the recent rejig in management that we've seen for Kotak Mahindra Bank. They've reappointed KVS Manian as Joint Managing Director. This is effective March 1st this year. Anurag Joshi is standing by with more details. Anurag, tell us more about this change of guard.
Kotak Mahindra Bank has named KVS Manian, currently a whole-time director at the lender, as a joint managing director. Shanti Ekambaram, another whole-time director of the bank, has been designated as the deputy managing director. Both Manian and Ekambaram's appointment will be effective from March 1. Devang Ghiwala has been appointed CFO of the bank and designated president and group CFO. The other two key appointments made by Kotak Mahindra Bank are Milind Nagnur, currently the Chief Technology Officer, who becomes the Chief Operating Officer of the bank, while Paul Parambi will be designated as the Group Chief Risk Officer at the lender. In October, Kotak Mahindra Bank had appointed Ashok Vaswani as the CEO and Managing Director to succeed Uday Kotak, who is the founder of the bank. Both Manian and Shanti Ekambaram have grown with Kotak Mahindra Bank and have been with the bank from the time when the lender was a non-banking financial company, and in 2003 had converted into a commercial bank.
All right, thanks Anurag for those details. On the sidelines of the Mumbai Tech Week, Aishwarya Patil caught up with MD and CEO of NSE, Ashish Kumar Chauhan. He talks about trading hours extension as well as the future of India's capital markets. Listen in to a slice of this exclusive conversation.
In a way, all the brokers have to agree, SEBI has to agree. So whenever they tell, we will do it. Otherwise, in GIFT City, we have 22 hours exchange working, which works on our own technology. In India itself, in India jurisdiction, we have commodities exchanges working for till 11:30 in the night. So we have some examples and other things. But as and when people feel comfortable in the stock markets, we will do it. We are not in a hurry.
But the phase one will of course be FNO.
Naturally, because that's what the rest of the world does. Because although we were the pioneers of automated trading, the rest of the world became automated later on. But they have gone for literally 24 hours trading. We have remained with 6 hours, 15 minutes trading. But that's beside the point, right?
As we speak, market touched record highs, and you've earlier forecasted for a $50 trillion market cap by 2047. Do you think we are poised to touch that and achieve that mark?
Broadly speaking, my hypothesis, which I told today also, is that the technology creates wealth, and India is now becoming a very tech center of the world, and so large part of the new wealth will be created in India. And the way things have happened over the last 10 years of using technology in all walks of life, including in governance, has, I think, in a way created an ecosystem, a confidence that we are a tech nation. Right, and new wealth will be created using technology, and that's where, broadly speaking, we have already reached $4.5 trillion, $4.6 trillion of wealth using stock markets. In next 25 years, if we continue to do well, I think we are well poised to have almost a $30 trillion of GDP and $50 trillion of market capitalization.
On that note, let's just slip into a very short break, viewers. Don't go anywhere. We'll be back with more updates after the break, because it seems like Nifty implied has moved on and moved down with a bit of a negative bias as of now. Welcome back, and you're watching Market Fatafat on ET. Now let's move on and talk about Z and Sony saga that has been going on, and in another last-ditch effort to actually save the merger, Z and Sony seem to be huddling up. According to Economic Times report, the two companies have re-engaged to revive their $10 billion merger, which was officially called off just a month ago. Sources tell the paper that representatives from both the sides have held meetings with talks gaining momentum over the past 2 weeks. However, in terms of the major differences are yet to be sorted out, as neither of the sides are willing to budge. Now, remember, one of the biggest contention points that came in was that Sony's demand of Puneet Goenka stepping down as the CEO, along with a $300 million write-off on the cricket rights. Z is expected to inform Sony over the next 24 to 48 hours if it's willing to accept all the terms and conditions. So that's the latest update that we have on that front. It's an Economic Times report that we're keeping an eye out on.
Absolutely, and what we're also keeping the spotlight on is the fintechs on the back of regulatory action against payments giant Paytm. According to an Economics Times report, Finance Minister Nirmala Sitharaman is slated to meet the heads of fintech firms along with the Deputy RBI Governor, along with other top officials as well. On 26th of February, the meeting has been called to reassure the fintech industry that the sector remains a key priority for the government, as well as allay any concerns in view of the RBI action. So definitely a meeting that will remain in focus, Vinny.
Absolutely, but let's go across to Ansh, who's standing by to give us an FNO snapshot this morning as well. Ansh?
Right, so Nifty touched record high level after a gap of 11 sessions, and as you can see in the picture, despite giving a record high, it faced some resistance at the upper level and corrected around 70 points from D's high to close at around 22,120. This is the same level from where Nifty had given a down move in the previous session. So Nifty needs to give a decisive close above this level to be good positive. But let's talk upon FNO segment. Here we are seeing in option front, we are seeing mild call buying happening at 22,000 level, 22,200 level, indicating traders are expecting Nifty to go around this level, whereas on downside we are seeing put writing at 22,100 and also actually at 22,000 psychological level as well, indicating good supports around this level. Let's see what happened in Nifty Bank. So if you'll see the chart of Nifty Bank, we'll see that Nifty Bank has been taking resistance at around 46,800, which is also a 50 DMA level. In previous session, also it took a resistance for at the very same level. So it also needs to give a decisive close above this level. It has been taking resistance from last 2 months at the same very level. Whereas if we talk about index futures, then here we are seeing open interest declining by almost 4%, indicating good short covering. This is a bit of positive sign. Whereas on option front, if we'll see, we are seeing active call writing happening at 46,700 level, indicating resistance around this level, whereas on downside we are seeing put writing at 46,500. So this 46,700 is the same level, similar level to where we saw resistance on chart as well. On chart it was around 46,800, and on option front we are seeing 46,700. So if we talk about what FIs did in the previous session, in index future they added around 4,600 contract and they did some short covering as well. So net to net we are seeing net addition of around 5,000 contracts on upside, which is a positive sign, due to which the total FI long position have inched higher from 38.2% to 39.3%. With this, the total long is around 1.6 lakh contract. This is a 17 session high as well. So here FIs are getting positive.
Okay, Ansh, thank you so much for that. But, let's talk about some of these stocks that are going to be in focus today. We have Godrej Consumers that's going to be in focus. Small rejig and reorganization that the company had already highlighted about. And this was that, they will be removing arms that are not doing well. Any of the businesses that are not profitable, they will be shifting and reorganizing those businesses. So now the company is going to divest its stake in its East Africa operations. And this is going to be to HKG Africa Weave, consideration of around 30 crores. So it's a very small deal, but the point is that it's a positive development coming in on that front, because they will be moving to the royalty model with the East Africa operations. That's going to be a franchisee model. They'll be focusing more on research and development and marketing in these geographies, and it's expected to be completed by a Q4 FY24 or Q1 FY25. Now, what will be the impact in terms of this? So in terms of negative revenue impact of around 70 crores that could come in Q4 FY24, but overall on an annualized basis, or sales impact would be of around 500 crores, but profits that would be benefiting by around 50 crores. That's on an annualized basis. Also, this will further aid the profitability of the other regions, that's Africa, USA, Middle East, as well as that whole cluster in the Middle East as well. And let's not forget, East Africa was one of those businesses which was seeing a decline for the company. EBITDA margin was also quite low for the company. So analysts, what they are believing, that this will actually help the company achieving that 15% margin, EBITDA margin target over the next couple of years as well. And Africa business sales now will come down to from 26%, the overall weightage, to 20% in FY25. So that's what GCPL's word is looking like, and that's what we're keeping an eye out on GCPL. A slight bit of a positive development on that front. But let's move on, talk about the consumer durable segment. We have Whirlpool that's in focus, and this is according to sources or by agencies as well as reports that are highlighting that the foreign promoter, that is Whirlpool Corporation, is likely to sell 24% stake in the company. Whirlpool Corporation was actually holding stake in the company through its subsidiary Whirlpool Mauritius that held around 75% stake in Whirlpool India. Now this transaction is around $450 million. Floor price is at 1,230 rupees per share that is expected, which is at a discount of around 7.6 to 8% of yesterday's closing price as well. Other than that, what is highlighted according to the reports as well is that Whirlpool is expected to retain the minority stake in Whirlpool India as well. And why the sale? Because Whirlpool Corporation in one of their press releases recently had highlighted that they plan to reduce their debt of the company. This is going to be by deleveraging the balance sheet as well, and obviously debt leveraging, strong free cash flow, and India share sale is something that they would be looking at in terms of improving the debt. And that is the main reason that Whirlpool Corporation is looking to sell stake in Whirlpool India. This is according to agencies that we have picked up in terms of these reports.
Absolutely. So that's about those two counters, but there's a host of stocks that will remain in focus in today's trade. Ansh is joining in with that list.
Right, so NBCC will be the first stock in focus for today's trading session, as they have received multiple orders worth rupees around 370 crore from Rani Lakshmi Bai Central Agriculture University. And as you can see in the graph as well, that stock had already reacted in the previous session as well. Apart from this, Astra Microwave will be in focus, as a company has incorporated a wholly owned subsidiary, Astra Space Tech, for the design, development, manufacture and integration of satellites, satellite payloads and launching of satellites, and also establishing of ground stations for satellite tracking. CI Automotive will also be in focus, as they have reported their numbers, and the company has reported revenue which is down by 0.3%, EBITDA is up by 11.9%, but PAT, it has come down by over 74% from 657.8 crore to around 169 crore. Apart from this, MedPlus Health will also be in focus, as one of its subsidiary of the company have received suspension letter from Drug and Control Authority, temporarily suspending operations of 2 of its stores for 3 days and 1 day respectively. So keep an eye on the stocks.
Thanks, Ansh. So we'll definitely be keeping an eye on all of those counters. But moving away from that then, Deepak Fertilizers has entered into a long-term agreement with Norwegian oil and gas sector giant Equinor for a long-term supply of LNG. Sharad is standing by with more details. Sharad?
Well, important development coming in for Deepak Fertilizers, as the company has signed a 15-year LNG contract with Equinor, which is a Norwegian giant company. And importantly, if you look at it, there will be an annual supply of almost 0.65 million tons over the next 15 years, and this is starting from 2026. Now, apart from this also, this will be an end-to-end solutions tie-ups, and also it will be helping the company's various product segments. And as per analysts, the agreement also encourages further collaboration coming in the petrochemical feedstocks and strategic decarbonization. Now, for the company, 2 important positives also come out from this. First is, of course, absorbing the global volatility in the prices, and also the overall margin profile of the company is expected to go up. Now, this tie-up is also providing trading for LNG parcels, as well as accommodating their growing captive needs for the company itself. Now, the company is also at an advanced stage of actually tying up the regasification terminal as well with the gas line connectivity as well. Now, Equinor itself is a very large player and a leader in the oil and gas sector, and importantly, this would be one of the largest deals signed by Equinor with an Indian company. And also importantly, the gas will be mainly used as a feedstock for production of ammonia.
All right, thanks Sharad for that update. But let's take a look at some other news and updates coming in then. Deadlock between centre and farmers continue as farmers reject centre's proposal on MSP guarantee for 5 crops, instead demand a 5-year guarantee for all 23 crops. Farmers unions to resume Dilli Chalo March from tomorrow. And the 12th edition of the Milan exercise commenced in Visakhapatnam with participation from over 50 countries in the 9-day event. From the Indian Navy, nearly 20 ships, including aircraft carriers Vikrant and Vikramaditya, will join the exercise. And nation will get 3 more Indian Institutes of Management. Prime Minister Narendra Modi to inaugurate Jammu, Bodh Gaya as well as Visakhapatnam campuses. Several parts of the national capital received light rainfall earlier this morning. Areas including Mandi House, RK Puram, Indraprasth Road, as well as Kartavya Path witnessed fresh showers. The Met has predicted more showers in the national capital later today. And runner Gulveer Singh wins gold at the Asian Indoor Championships in the 3000 meter race. India finished the athletics meet with 5 medals, 4 gold and 1 silver. And with that, we're timed out on this edition of Market Cafe on ET Now. From me, Shreyansi Singh, as well as the team that put the show together, thank you so much for watching. The market takes the action forward.